You see it in Chicago. There's so many funds. St. Louis has quite a few, and now Minneapolis has some great ones. And the biggest learnings for me were basically following the trends of just where the people were moving and popping up. I mean, the coasts are still epicenters. I think they continuously will be epicenters. Nobody over there is going to tell you that they're slowing down, but I do subscribe to the theory that they'll become less relevant.
The startup investment landscape is changing, and world-class companies are being built outside of Silicon Valley. We find them, talk with them, and discuss the upside of investing in them. Welcome to Upside.
Woo!
Hello, and welcome to the Upside Podcast, the first podcast finding upside outside of Silicon Valley. I'm Jay Klaus, and I'm accompanied by my co-host, Mr. Quarantine Beard himself, Eric Hornung.
I'm doing it, Jay. I am rocking the beard.
You're joining the ranks.
Oh, yeah. I'm really just doing my best, Jay Klaus. That's what I set out to do. I said, quarantine's happening. No one's going to see me for a while. Can I rock a Jay Klaus beard? Answer, not really.
It's not the same at all. To be honest, I don't think I have a very good beard. I've been associated with a beard for years because I've had it, but I don't have that good of a beard. You have probably a better base. If you worked at it for a few years, you could probably have a pretty serviceable beard. You definitely have a better mustache than I do.
Well, here's a little trick of the trade, Jay. I'll tell you from one beard guy to another. See, I grew a beard when I lived in New York for a couple months, and you know that in between the mustache and the chin, the right here, that the listeners know what I'm pointing to. The right here.
Yes, I see it.
The key for me is shaving that consistently, because if I don't, I get the thickest goatee looking thing that you can't even tell I have a beard. It's just all you focus on is the right here, which again, listeners, is in between the mustache and the chin.
I don't think it's technically a beard. If you shave the right here, I don't think it's technically a beard. It's kind of more of a musketeer type situation.
All right. So I can't call it a beard. You want me to say, oh yeah, I have a musketeer right now? Is that going to make sense to anybody?
I think if you don't have the mustache, it's technically like a goatee, but you have the mustache, but it's not Wait.
Goatee is definitely a mustache. Goatee is when you shave the sides of the face, right? Like I have like these puby sides over here, and if I got rid of those.
Wow. Well, I support you. I think that a beard has been an underrepresented effort in your life to this point, and it's time for you to give it a shot.
Thanks, man. You know what? I love when I'm surrounded by people who support us, and today's guest has been a huge supporter of Upside. And look at this. This is going to be a double segue here, Jay. Are you ready for this?
Mm-hmm.
He's supporting underrepresented markets across the country as well.
There you go. You got what I was going for. Today we are talking with Grady Buchanan, the CEO and founder of OmniValley. OmniValley works to showcase and foster underventured and emerging entrepreneurial ecosystems by connecting, matching, and introducing all relevant and participatory investor organizations. OmniValley supports institutional investors, venture capital firms, accelerators, and ecosystem supporters. Eric, speaking of Grady supporting us, Grady has been one of the greatest behind-the-scenes supporter of the show to date.
Ooh, the greatest. That was nice. Yeah, we told him after this episode, little inside baseball here, we're recording this intro after the episode, that he is number 3 on our recommendations, introductions that turned into episodes list. So he's just been sending us nonstop introductions since then, because he wants to be number 1. But he has been a huge proponent of Upside, and he's been very helpful in getting us connected to new ecosystems that we want to explore.
That's right. We're keeping score of who is being the most supportive of us. We're keeping score of those introductions.
Shout out to Victor and Sibby at 1 and 2.
OmniValley was founded in 2018. It's based in Madison, Wisconsin. Eric, I'm excited to hear what got Grady excited about this opportunity that you and I have been looking at for the past couple of years, pretty much in tandem. Seems like concurrently we are exploring the same areas.
Yeah, it's fun when you find people who are, you and I call it running in parallel, Jay. And Grady's definitely running in parallel on a similar concept, on a similar trend, except instead of focusing on founders and investment, he's focusing on LPs and fund creation.
We'd love to hear your thoughts on this episode as we go through. You can tweet at us at UpsideFM or email us hello@upside.fm. And if you want to get some thoughts on Eric's beard, Tweet at us at UpsideFM, and we'll send you a photo. In fact, I might just have to tweet it out anyway. And we'll get to that interview with Grady right after this. Eric, can you imagine being a founder working with Drive Capital, Hyde Park Venture Partners, Draper Triangle, Excel, Chicago Ventures, Refinery Ventures, Hyde Park Angels? Can you imagine being a founder and working with all of those VCs and more?
Man, if you got an investment from or worked with all of those VCs and they were giving you advice and on your board, and you just have to be probably one of the best companies in the Midwest or in between the coasts, I would say.
And that's exactly what Integrity Power Search is. Integrity Power Search works with all of those VC partners and more as the #1 full-stack, high-growth startup recruiting firm between the coasts. They partner with those venture capitalists, private equity groups, and CEOs to build amazing teams to the world's most disrupting companies. Eric, they are working with 84-plus companies in those different venture portfolios, helping fill roles related to SaaS companies, autonomous vehicle companies, big data, computer vision, blockchain. If you're looking to hire, Integrity Power Search can help.
And if you want to learn more about Integrity Power Search and what they're doing in between the coasts, you can go to upside.fm/integrity.
Grady, welcome to the show, finally.
Thanks, guys. No, pleasure to be here.
It's been so long since we first met, and we're excited to have you on. And I think I know a little bit of the story, but I want to hear the full history of Grady. Take us on that rocket ship.
Oh yeah, no, happy to. Yeah, Eric, we've definitely talked for quite a bit, and Jay, pleasure meeting you and finally being on the show. I love the show, guys. So thanks so much for the opportunity. But yeah, my background starts. I was born actually on the East Coast, so parents met over in the Washington D.C. area. That's where I was born. I grew up, but moved to the Midwest very, very early. So I like to say that I'm from Wisconsin. Parents live in Milwaukee now. Younger brother still in Milwaukee. I went to the University of Wisconsin-Madison, so I've definitely stayed in the Midwest. Called this place home for enough years where I think I can claim it at this point. And in Madison, so I've stayed here in Madison. I went to school, like I said, high school in Milwaukee, Wisconsin. And so there was really my first entrance into where I thought that I would land in my life. And so career-wise, I should say. And I took an economics class. And so this was back in 2008. So everything was happening in 2008, the fall. I had just been starting my senior year of high school. And so for me, I mean, it was all very much over my head. Parents were complaining about it, as I'm sure a million others were. But for me, I didn't really know everything that was going on, wasn't smart enough, didn't really want to grasp it, was playing football at the time, had some other things going on that I deemed more important. But the economics class was fairly interesting to me. And unlike many, I thought I knew very clearly the route I wanted to take. And so I took economics to college. I was at the University of Wisconsin-Madison, like I said, made some great friends in the economics department that I still have today. And I just did the economics route. I considered a little bit there in my junior and senior year to contemplate business or maybe adding an additional degree, but nope, economics. That's where I wanted to be and that's where I wanted to go. And I was pretty gung-ho on that. And so I graduated with obviously the economics degree, and then I went straight back to Milwaukee. I had thought, okay, I'm going to go do equity research. I'm going to work in private equity one day. That's the clear route. That's what I was taught to do. I exited school and quickly realized equity research is a lot about understanding the companies and the cash flows and internal workings, which I had no experience in. I knew how to read supply and demand graphs, which is not in any job interview. It just doesn't seem to come up. So for me, it was just, let's learn about the companies, the internal workings. And like I talked about, a dollar into a dollar out. And that really landed me at a bank. It landed me at Wells Fargo, doing treasury management and almost coupling this into something that I thought I might want, but never had experience in, and it was sales related. So what we did was we went around to companies in Wisconsin. Our territory was Milwaukee and then Green Bay and northern Wisconsin. So a lot of driving to interesting parts of the state, that I just didn't get to see, but just was a lot of driving and a lot of big companies out there that are doing some pretty interesting things globally and helping with their treasury management services. And so that was pretty interesting for me. I did that for almost 2 years. And then I realized, you know what, I do want to get back into the investment or the economic side of the things, whether it be research or some other matter. And I took a job down in Chicago at Northern Trust. So switching bank to bank, conservative to even more conservative, older to even older. And so for me, it was, all right, I'm doing investment performance now, and I'm doing risk and analytical services. somewhat related. It's very interesting. I'm learning more and more, but that's where I got my foray into institutional investing and what they're looking at. And so those portfolio managers I would be interacting with, because obviously running their performance and helping them with investment suggestions when they would ask, that was really our role. And as a younger analyst, very heavy on the analytics, and so which was great. And so I learned a lot. And I ended up taking that. One of my clients happened to be the Wisconsin Alumni Research Foundation, and so they're a university affiliate to the Wisconsin Madison here. And for them, they have a $3 billion endowment portfolio that's attached to their tech transfer office. And so for me, it was, wow, this is pretty interesting. I've never heard of this. Wisconsin Alumni Research Foundation WARF is this building on the other side of campus. Wisconsin's campus is humongous. I had never actually even been over there. It's a tremendously tall, rather old, ugly looking building. I was like, what goes on over there? It's not really my world. But I ended up, again, they were a client. I ended up interviewing with that team. It took me a few hints, actually, because I wasn't savvy enough to know that they wanted an interview, but ended up going up there. The team was 7 people at the time when I joined, and my main responsibilities were the analyst. And so this was an institutional portfolio. They were a long-term investor, investing throughout every asset class you guys can imagine. So an awesome experience, great portfolio, a lot of good exposure for me to, again, all those asset classes. And I landed in the hedge fund side. I realized after a few months, hedge funds weren't really for me. Nothing against hedge funds. It's just not my world. It was moving a little bit too fast, and you're not really creating much. You're more trading on algorithms. Obviously, you guys know this. But then venture capital and the more altruistic events and the investments around here and attached to the university were really where I found my niche. And so for me, it was, well, there's Generator here, and I know you guys know Generator really, really well. And WARF was a proud supporter of them in 2012 when they got up and running. And American Family is a big corporation here, and they do a lot in the innovation and investment space, especially locally and into venture capital and local startups. And it was a world that I knew nothing about. I mean, we obviously had startup founders, and you look at them like they're crazy people, just because that's not the route that you're in. And for me, it was, well, we have all these venture capital resources. We're investing our portfolio pretty holistically throughout the US and even globally. We have a lot of really good resources on the venture capital side. Generator has some really good resources, but they're more or less, this was at the time, more or less landlocked here to Wisconsin and Madison and Milwaukee, and now they've obviously grown. But how do we connect our portfolio to really grow this ecosystem, and how do we serve our role as a limited partner, given that we're not directly investing into startups, and WARF was doing some co-investments at the time, but it wasn't my role to invest directly into startups. Our role was to go out and find venture capital firms and invest them into our portfolio. Of course, we'd have conversations. Yeah, it'd be great if you guys come to Wisconsin, look at some companies, but at the end of the day, that's not what they were going to do. And it's great that we now have some venture capital firms here, like the ones 4490 in Madison, and we have some others throughout the state. But in order to connect them, I wanted to leverage our network, and I wanted to speak with enough people and see if they wanted to tap into the Wisconsin market. And that was really where the crux of the idea for OmniValley came, in speaking with the accelerators, the local incubators, and some of the VC firms here. How do we highlight everything that they're doing and give them exposure to the rest of our network that we have as limited partners? Because we have I'll use luxury loosely, but we have the luxury of talking to anyone that we want, and we can actually bring them here and get them introduced to the real doers in the ecosystem. And that's exactly what happened. We put a network online, and we started to talk to everyone. I'm a big learner by just doing or speaking to people. I love to interview people, so I love what you guys do at Upside. But you guys showcase the upside of the startups here in the Midwest for investment. We wanted to do exactly that, but our platform is designed just for investors. So our investors can speak with one another to really give them the lay of the land and understand what the ecosystem looks like. If you get into your portfolios and startups, great. But a lot of the portfolio companies that are here aren't actually in Wisconsin. They're just part of the portfolios that the investors have. And so if you want to know Madison's ecosystem, it'd be tough to talk to one startup and talk about the ecosystem, whereas the investors know more, was at least our theory. And so, yeah, to wrap it all up, economics all the way through back to venture capital, and now just serving as a connection role, given the experiences I've had, and putting it online in an exclusive manner was our goal.
So you were a institutional investor. You have played in this space, and it's somewhere that we really haven't talked much to on the podcast yet. How do LPs in general, and I understand that there's different categories of LPs, but how do they think about allocating capital to things like hedge funds or private equity or venture, and what kind of trends are present in the industry?
Sure. So limited partners, in a way, there's obviously the chief investment officer, the deputy chief investment officer, director of investments, whatever the titles may be. There's someone there managing the allocation, right? And it's dished down to your portfolio managers and your directors and even your analysts if they're running certain pieces of the portfolio. But most endowments or foundations or even larger pension plans, they'll have an investment committee that's a subset of the board, right? And so the investment committee is there to really say, you know what, we understand the strategy that you guys are pitching, if that's your route, or we want you to run this strategy and we want allocations to look like this. Because at the end of the day, your limited partners, for lack of a better word, we're very good implementers. We know how to invest appropriately and we know how to invest very efficiently. So it's not us actually dishing out money and investing in stocks, sitting on a trading floor. Most of us are very small teams and we're using hedge funds to do that. We're using other portfolio management services to do that. And so when it comes to allocations for us, it really came down to from the investment committee. And it came to say, hey, we want this certain allocation to venture capital. We want a big piece into hedge funds. We want to run, our portfolio was a little bit unique. We ran a risk parity portfolio with an overlay. So not to get too in the weeds here, but risk parity is just let's invest through asset classes pretty holistically and use some leverage and balance the risk, because if you're taking risk, you should have the same return. And then with the excess cash that we had because of the leverage we were using, we invested pretty heavily into hedge funds. But on the venture capital piece, we always had a 10 to 20% venture capital allocation. Within that was always a very small portion to what we called emerging managers, which again, I'm sure I'll get in trouble for this one day, but more of the altruistic type set of let's help out the state of Wisconsin, not so much focused on that return, but really focused on giving money here because we are attached to the university. We're focused on growing this ecosystem. It should come out of our portfolio. Returns are great, obviously, but we need to put money to work here because it's one of our responsibilities. So I think to answer your question, Eric, it really is, it depends the strategy that the portfolio managers can come up with. But a lot of times the investment committee will decide where your best allocations lie, and it's our job to go implement.
I want to ask Jay a question real quick.
Oh, God. I don't know. I don't know if I want you to.
This is so much like my world that a lot of what Grady's saying just seems clear and obvious to me. What is not clear and obvious to you as someone who exists outside of this institutional finance world?
It's become clear to me through this podcast that there are different classes of investors. When you say institutional investors, I'm not even sure that's as clear as it could be. Venture capital, hedge funds, I think that's fairly clear. But can you talk to me about maybe like through the lens of Wharf and some of these institutional investors, when they're thinking about allocating capital, what is it that they're trying to, I mean, of course, they're trying to maximize for a return, but what are the other considerations that they're going through when they are thinking about allocating capital for an endowment, for example?
Right. So at the very base case, we all have a spending requirement. It's almost, for an endowment, we're trying to hit a certain return and we all have our respective portfolios, whether we trade stocks or ETFs or we have a 401k that our company takes care of. What's your goal there? The goal for the endowment is to last forever, right? We're a very long-term investor. A lot of our models would actually have 100-year outcomes. And so that weathers you through many, many different recessions. Our portfolio is meant to be there to support that spending requirement. So again, that spending requirement is really, what is it that we're giving to the university? What is our endowment there to support? And many endowments have different spending requirements, right? They could go to certain events. Ours goes obviously to the university from Wharf, as does the University of Wisconsin's foundation, and a lot of those university attached ones. But the state pension plan here is investing on behalf of state employees, right? And so their goal is a little bit different. Our goal was to beat the market and to have and to work well with inflation, obviously, and then to have some sort of excess return. But the core return for us was that spending requirement. And I think for us, it was always hovering between 4% and 6%, which you guys can say, well, the market runs very, very hot in some years. That's great. Our portfolio isn't meant to deliver outsized returns, right? It's not meant to deliver very undersized returns either. It's meant to weather through any storm. The investment committee, it's by no means a sexy way of investing, right? It's not, oh my gosh, we're the best hedge fund, we get 30% returns year over year. That's not going to happen in our portfolio, because if that were to happen, it could also happen that we lose 30%. And that's way, way worse than it would be to not hit our spending requirement of that simple 6%. So we have to think about it in terms of inflation. We have to think about it in terms of the long run. And we have to manage the portfolio very risk aversely almost to just hit that return and make sure we can hit our spending requirements.
What was it like going from Grady the analyst to Grady the community builder?
Oh, it happened. I don't know the exact day when it happened. But for me, it was I joined Wharf, and I guess I tricked them well enough in the interview to make them think that I was ready for this position, or they knew firsthand. It's like, oh, here's a very raw piece of clay we can mold into whatever we want. But what I thought about is I don't know anything about this space. We had a great portfolio manager that knew hedge funds that had been running portfolio really, really well, and still a very good friend of mine. And he was able to teach me the hedge fund space and the diligence required and the right questions to ask and how to speak to those people. Again, not my world, wasn't my true interest. And on the venture side, we had some people, but they were obviously busy. And for me, I started calling everybody. I started calling the accelerators. I started calling the venture capital funds, started here in the Midwest, obviously knew our portfolio managers really well, but there's only so many managers in there. And so I started calling everyone because at the end of the day, what I realized is I'm not going to be able to apply what I learned in a college class without knowing how the real world is working. And a lot of the venture portfolio managers, a lot of the accelerator founders. I mean, these are very interesting people, and they're telling you exactly what they see by way of trends. They're telling you how they're trying to build their own communities. And you see a lot of similarities in the Midwest and the more peripheral ecosystems. And then you see a lot of similarities between New York, Boston, and San Francisco, obviously. But when you look at those three markets compared to the rest, very, very different. And our portfolio had funds on the coast. It had funds within the Midwest. And I really just needed to learn as an analyst from the people that were doing this. And in doing that, Eric, to go back to your question, it was, well, how can we apply that to Madison? I mean, everybody's doing very different things here. Let's get to know the people in Madison. And I almost did that second. And so that's when I started to get involved with the Madison ecosystem, learning more and more what Wharf was doing on the startup side, because Wharf is a tech transfer office that helps with university startups, and getting more involved with those people. Madison's ecosystem isn't that large, right? And nor is Milwaukee's or Wisconsin's for that matter when it comes to the right people to meet. And I just quickly became, you know what, I'm just going to reach out to them. I'm going to be a little bit bold here. I don't know them. I'm going to reach out cold on LinkedIn, or I'm going to use connections of connections. But I need to speak with these individuals to hear what they've been doing, because they've been growing this ecosystem for how long. And they're the real doers, and I would love to be a part of that. So it started from the top down, just using my role, figuring out what other people were doing in their ecosystems or how they were investing in their respective markets, and trying to marry that with the people I knew here in Madison.
What were some of the more surprising insights you gained after doing a bunch of these interviews with, let's start with venture investors across the middle of the country?
Well, originally, so I when I joined Wharf, I was still very naive, right? I mean, I had learned what a limited partner was. I learned that they were the ones giving the money to the venture capital managers, and that it wasn't just a bunch of VCs investing their own money, because that's how dumb I was when I exited school. But and hedge funds too. But for me, I started talking to, the big difference is, and the biggest learnings were the differences between the coasts and what was popping up in the Midwest. So this was 4 or so years ago. The Midwest was still growing, obviously, and it is today, but it wasn't where it is today. I mean, it grows so fast, and you see more emerging managers and more teams spin out of large venture funds move to the Midwest. I mean, you saw Chris and Mark do it at Drive, and that's awesome. I mean, they can bring what Silicon Valley has to Ohio, and we need more funds like that, and not necessarily from the coast, but you see it in Chicago. There's so many funds. St. Louis has quite a few, and now Minneapolis has some great ones. And the biggest learnings for me were basically following the trends of just where the people were moving and popping up. I mean, the coasts are still epicenters. I think they continuously will be epicenters. Nobody over there is going to tell you that they're slowing down, but I do subscribe to the theory that they'll become less relevant, because I think while they'll always be these kingpins, the Midwest and these funds that have been popping up, it's just more and more funds. My biggest learnings were, you'll never have a shortage of people to talk to. They're all very interesting. They all see their own respective markets, how they see their markets, and you can talk to a fund that is literally across the street from another in a smaller market, and they'll say different things, and they're well connected to one another, but you get these great insights. And I can't pinpoint one thing particularly, but it's very different learning about different cities, and it's very, very interesting.
What was the impetus to say, I'm going to take on the gigantic effort of building a company, a brand, a software tool to bring these connections you are building into a digital organized space?
Like most, I feel it started as a hobby to better myself. It wasn't really meant selfishly. It wasn't meant to help anybody originally. It was a network for myself. I put it out there online because I truly did want to connect. I wanted other people to do the work. Honestly, it's like, okay, if we can put this network together, I expect you guys to go out and connect. That'll never work, especially if I'm treating it as a hobby. They're going to treat it as a hobby. Makes zero sense to me. If you're going to jump in the river, you might as well jump in a river and start avoiding the rocks. And so for me, I jumped in, I went full on, and that transition was slightly easier for me. And I'll spare all the gritty details, but the Wharf investment team doesn't look like the Wharf investment team anymore. And so this happened, and Wharf was cordial. They were very nice enough to let OmniValley run, and it was obviously pretty applicable to what they were doing, especially within our portfolio. So that was great. But the investment team took a hit mid-year 2019, and when that happened, we saw some people leave, and they went off to bigger and better things. And I ended up just leaving and starting full time in November of 2019, and so I kind of like I alluded to, I just was more or less pushed in the river. And now it's like, okay, Grady, start avoiding the rocks here and make this work. Figure out as you go. I didn't know anything about brand. I had a name, and it was a font that was free from Word. And it was, I put an O around the V because I was like, we could use the OV on LinkedIn. That seems to make sense to me. But it was really moving through as I progressed. I had a great co-founder at the time that was helping me through this, and then we ended up finding 2 additional people that are amazing, and they're full time on our team too. So it happened pretty organically, but it was definitely a process over time.
You mentioned that you jumped into the river. You're also working on a fund of funds called Nothing Ventured, Nothing Gained, or NVNG. Do you consider yourself fully in the OmniValley River, or are you kind of still splitting your time? And what does that future look like?
How I justify it to myself, because it's a good question, and it's one I ask myself all the time. It's like, okay, what are we doing today? But for me, I look at and as cliche as it sounds, there's 24 hours in a day, right? And so and if you break that up by 3, there's 8, 8, and 8. And I'm supposed to sleep for 8 hours. Admittedly, I can't do that. I sleep because I have to. I eat because I have to. But the 8 and 8 part for me, it was, okay, I could spend 8 hours doing OmniValley pretty easily. And OmniValley does require a little bit more work since it's almost ready to scale out there. And NVNG was something that we're starting with the ex-chief investment officer at Wharf, honestly. And she when she had left Wharf, she realized, okay, what should I put my talents to work here? I've been in Wisconsin for so long. Grady's really well connected on the venture capital space. Let's bring him on too and try to found this company that will serve as a corporate venture capital fund-to-fund arm. We'll invest very similarly to how we did at Wharf. We have experience in it. We have the right connections. Why don't we launch and we'll work with some of the venture firms locally, and they're nice enough to house us. But that initiative made entire sense to me, and it was very related to what I was doing on the connection space when it comes to OmniValley. And so marrying the two seemed to make sense. Obviously, business partners at NVNG know full well what OmniValley is. People at OmniValley know full well what NVNG is. I think, honestly, and both of them make $0. So I think, honestly, it'd be nice to just have to do one thing. But I also think, personally, I don't know if I could just do one thing. I always had Wharf, and then I had OmniValley, because I need to be able to turn my brain off and do something somewhat different. And if that's work, it's work. If it's going on a run, it's going on a run or walking around. But the idea of having 2 things that are running simultaneously but are related is very attractive to me. And I think managing both can be tough. It's just all about how you balance your time.
Can you give us the optimistic vision of what OmniValley can be and on what time frame?
Sure. So in 2 days, we'll have the entire market. To answer your question, we're we're growing slowly, but almost methodically slow. And so what I mean by that is we do a lot of speaking with our members. So we don't have customers. We have members on our network, and our members are the venture capital firms, the larger limited partners, family offices, angel groups. We now support, and obviously accelerators, and now we support individual angel investors that we just released a few weeks ago. So our target market has grown dramatically, having individuals being on the platform. But for us, there's about 20,000 members out there that are potential users for us. And that doesn't include all the corporate acquirers. They're very hard to count. But within the US, I mean, there's 4,000 some venture funds. Within ex-US, there's 7,000 some venture funds. We'd love to see, very, very aspirational, like you said, very optimistic. In a few years, we'd love the word of mouth to be there where we have the platform for venture capital firms, accelerators, any investors into venture capital funds or to startup companies. This should be a great place for them to go and find the data that they need to take their handshakes from 10 handshakes down to 7 or 8. We don't really need to be the deal engine. We don't need to move money on the site. For us, we wanted to make it free for our members so that they can go in, still feel an exclusive environment to one another, and it's a peer network. So by all means, share your Calendly link, share your phone numbers, your emails, everything that we hold very near and dear to our hearts that we're afraid to get out there. This is for investors. And so I guess very optimistically, we'd love to own most of that market. We'd love to be able to support most of the ecosystems and for them to grow their own groups within OmniValley. I mean, if you want to showcase Milwaukee, if you want to showcase Columbus or Cincinnati, there'll be forums there for you to do so. Anyone from around the world should be able to see and hear about what's going on in Ohio without having to physically be located there. And I mean, I liken it to numbers, Jay, to answer your question. But if we could get a good portion of that target market, it does spread. I mean, this industry is very relationship focused. And so if I'm using this and they're using it, the third person, there's a good likelihood that they should be using it too. So, to wrap it all up, it really is, if we can get a decent number of venture capital firms, accelerators, and then more selfishly, it is those smaller incubators, the accelerators that are hitting home local to their ecosystems. I want all of them on the platform. I want them to be able to showcase what they have and to gain exposure from others.
When you think about your go-to-market, how do you think about the trade-off of, and I'm looking at your ecosystem map as I ask this question, of saturating a market to the point of critical mass versus painting with a broad brushstroke and hitting new ecosystems?
Right. So for when we market, so it's a great question because it's something that we thought about. We market very agnostically throughout regions. So when I say that, we throw out marketing material to anyone that's in our pipeline. At that point, I don't care where they're located. I want them to pop up on the map and to showcase themselves wherever they sit. Because honestly, we have funds that are in the heart of the Midwest, but they only invest on the coast. Or we have funds that are in the coast that are really looking hard at Colorado, or they're really looking hard at those mountain or even Texas. And so where they invest geography-wise isn't necessarily specific to where they're physically located. And so I don't think saturation is it's a good question. It's just, it's not very applicable when it comes to our members and what we're doing in our network, because at the end of the day, if everyone's located in Bozeman, Montana, great, there must be something going on in Bozeman, Montana. You should join that forum, figure out from those groups there what's going on. And for us, we never intended to beachhead ourselves. We had talked about it and figuring out how individual markets work. We knew the Midwest really well. But at the end of the day, we look at every ecosystem as ecosystem one or ecosystem XYZ. It doesn't really matter. They should all be treated equally and they should be the same. However many groups are located there, like if you're looking at it, Eric, you can see obviously New York, Boston, San Francisco, big dots on the map. Obviously, they have a lot of members there. But in the smaller communities, they don't. And in the smaller communities, we might have every dot that's actually in that community, but nobody would know that unless you go to those individual spots. And so we don't worry about the saturation. We really focus on attracting new members so the new members can drive those conversations and figure out where they want to go and invest.
How do you think about who those members are? So if Jay and I ran a fund and we were unaware of OmniValley and we went on and we saw you didn't have Drive Capital in your database, that could be a negative indicator for us. Or if we saw you had a defunct fund that, they are registered, that could be a negative indicator for us. So how do you think about negative and positive indicators in terms of who your current membership is? Or am I overthinking it?
No, I absolutely think you're spot on. I think every company should think about that when it comes to their customer base. Obviously, for us, we more or less get around it because all of our data and our profiles are controlled by our members. We don't input data for them. Anything that it's all editable by them. It's time stamped by us. And so for everyone else so if Jay and Eric's VC fund opened up, you guys could see who inputted what data and when, knowing that a group there did it. If you saw a defunct fund on there, you'd see a timestamp on there, and there would be a certain timeline for us where we would reach out to that fund and ask them what's going on. But it's controlled by you guys. It's very much it's like a conference, right? And so if you guys were to go to a conference and you saw somebody sitting over in a gray shadow and their fund was no longer open, you probably wouldn't go to them. And there'll be things on the website that we'll have to address to solve those issues as more and more people are on there. But it's funny you bring it up because honestly, we don't have the very largest venture funds that everyone would think about. I don't think you're going to see Sequoia or Andreessen on there for the foreseeable future, given their networks are so robust and them not needing any additional limited partners or any other co-investors at this point. Why would they need something like this? They might need it to address other markets if they're interested in entering them. But as far as a connection network, you're right. You might not see those big names. And I think we're absolutely fine with that.
Why does OmniValley need to exist when there's something like AngelList?
Sure. So OmniValley at its core, it's promoting exclusivity strictly to investors. And so while AngelList is really good at promoting deals and telling you who's leading syndicates and trying to get you connected to individuals, AngelList does a good job. They're a vetted platform, but they also have a brokerage arm attached to them. So they're facilitating moving money. It's a little bit more involved, obviously, but it's got real results when it comes to investments. Our platform is really meant to be a vertical of LinkedIn. We don't need to move money on the site. We don't expect you guys to. Our thought process is, and seeing how long it takes for some deals to be created or matched with other investors, we'll serve as the connection piece and we'll give you data that's inputted by our members that tells you if they're a direct investor, a lead investor, or a co-investor, when they're in market or when they're raising a fund. Very informational data. It's just rarely changing, right? And so AngelList does a good job of facilitating conversation and telling you, oh, there's this startup deal. It's in this market. Here's what I'm looking for term-wise. We let them take those conversations offline. We're really meant to be, like I said originally, we're really meant to be removing a few handshakes. AngelList is seeking to remove them all. Great. We think that process could look a little bit cumbersome at times. And how do you exactly know who you're investing in? It can almost delay deal flow. For us, we're strictly there to say, hey, there's an investor. They look pretty interesting. They happen to be in Green Bay, Wisconsin, but they're doing exactly what you're doing. Maybe you should speak with them. It's more of a suggestion than hey, I have this. Let's go run with it.
How does OmniValley make money or plan to make money?
So from a member perspective, we intend to keep the membership free. I'm sure I'll eat these words and somebody will play this back to me and we'll get sued over it. But in any event, we plan to keep the membership free because at the end of the day, connection should be free. I mean, having to hop on a plane costs money, having to even pay your own phone bills and try to call people costs money. But inputting your information on a network so you can be seen and get exposure by people that are on the coast or people all over the world, that should absolutely be free in my mind. And maybe we're a little bit too pure in our thinking, but as far as revenue comes, we really intend to provide additional more ad hoc services to that holistic subscription. And so when I say subscription's free, but the quote unquote premium services that'll be on there, we intend to have a service provider page where we'll have service providers that are more portfolio manager specific. They'll also have the discounts that you guys have seen for their startup companies. And then we'll also have company promotions where it'll be less solicitation and it'll be more, what does the company in this portfolio need? Can we match investors based on those needs? I mean, there'll be a lot of angel investors on there that are really good at finance, or they're really good at helping in fundraising, or they're very good at sales and marketing. And every, quote unquote mentor has a specific role that they can serve. And as an angel investor, they provide a lot more than funding. Obviously, all of our investor groups do as well. So if you can list the companies and say, you know what, I'm a venture firm. The Jay and Eric venture firm has three portfolio companies. They're out in market today. Yes, they're raising, but they're raising for these specific needs. Are there investors out there that can help them with this? And that's even further showcasing what it is that you guys have to offer. It's giving you the exposure that's required for venture funds. So more ad hoc services that we're thinking about almost look more advertising, I guess, but within the platform, still hitting onto our mission of trying to connect these markets to other markets.
So if I'm listening to this and I'm thinking, OmniValley sounds awesome. I want to get on there. I want to meet investors. How do I do that?
So currently, OmniValley is a free platform. Happy to say our landing page, the new platform design, released a few months ago. So we're pleased with how that looks. It should be a little bit more user friendly, but it's as simple as clicking on one of the join today or join the ecosystem buttons that you see throughout the website. That takes you straight to the register page. It's a 3-step registration process, again, to promote exclusivity and to have our investors be sure to input exactly the information that they want to be matched by. Once they're in there, you'll get sent to your edit profile page. We take some time on our side to make sure that we're vetting the profiles. Investor groups are slightly easier than individual angels are. But again, we want to keep the platform away from bad actors. We want to keep it very exclusive to investor groups. And so that's why we do that. But it's as simple as a 3-step registration process right on our website.
And then once I am in OmniValley, what would you recommend the first step that I take is as an investor?
Yeah, if you are, I guess, new or old investor and you're looking for new connections, I'd go to the ecosystem map. I love the way our map looks. It shows you exactly geography-wise where these funds and firms are located. So if anything, like I've talked about earlier, it doesn't necessarily tell you to where you invest, but it does show you where the heart of our memberships are coming from. It kind of shows you in a different way the trends throughout this market. It's like, okay, who needs more connections? Who's actually globbed on to OmniValley here? It looks a lot like it's in the Midwest. It looks a lot like it's in these very peripheral or smaller markets. And if you want connections in a space there, great, use the map. If you're looking for investment for a company that you guys have in your portfolio, or if you're looking just to get connected to investors that operate similarly to you, we also have a member list search, which is table oriented. And so what that'll tell you is you can sort by if they're a direct investor, co-investor, if they're a fund investor. So if you guys are raising money for a venture fund, it's great to have limited partners on there because a lot of them will strictly invest at the fund level, but they do like to see what everybody's doing. They love the transparency of it. But then it'll also show you the geo focus on where funds are investing. So we have a very simple button up there after you guys input your own stage of investments, your own industries, your own check ranges, and every other and all the other fields that we ask you guys to input. You can just click match my profile. And if you match your profile or edit your profile to what you want, it will pull up the investors that are in the space, that are in the market, that say, okay, yeah, we will do exactly this, or at least we're saying that we'll do exactly this. You guys click on their profile, call them up, grab a time on their Calendly link, or simply email them and say, hey, it looks like you guys are a great connection for us. Oh, cool, you're in Kalamazoo, Michigan. That's neat. That's close to us, or maybe it's not. But can you guys look at a company that's down here in Georgia? And a lot of that has happened, and it's been pretty interesting to see because investors don't need to be in your own backyard. We think very, very exclusively to our own markets, and our goal here was to open it up, and our goal for you guys as investors is to hop in there and open it up as well. So I'd say use the filters, check out the profiles. But ironically, what's best case scenario for us is if you hop off the platform and you take this and you run with your connections on your own, and you take the emails, the phone numbers, and you start to create strategic relationships with your next investors.
Awesome. Sounds like if people want to learn more after the show, they go to omnivalley.co. Anything else you want folks to know if they want to follow you or your work?
No, I think we're just coming off the heels of Invest Midwest conference that happened just here in early May, and we wrapped up a cohort program that we were in. So we did have our first investment, which was great, and going through that cohort was amazing, and it was a Midwest-based accelerator, so we definitely got to learn a lot. But I would say LinkedIn and Twitter is where OmniValley lives. That's where our target market lives. If you guys have suggestions, by all means, tell us. But that is where we're actively out there marketing, and you'll start to see our name out there a little bit more once we really ramp up those efforts. Yeah, by all means, please visit our website or call us at any time. We're happy to talk. We are connectors, and we're happy to learn more about anybody that's interested or share what we're doing.
All right, Jay, we just spoke with Grady from OmniValley. What do you think? You want to start some hot takes? You got any hot takes?
Part of that interview reminded me of why I switched out of finance and into marketing.
Why is that?
It's just, man, it's over my head. Some of this language that is related to finance, and I don't even remember the language. But I'm glad that you asked at one point, is this something that's second nature to you? And I could clarify a little bit. Because anytime we bring in somebody that has a little bit more of a sophisticated and private market background, public market background. It's just something I have almost no experience with.
I feel like financial language is like the opposite of marketing language. Like marketing language is meant to be simple and intuitive and you understand it. And finance language is meant to like make very simple things sound difficult.
Right. Right. But it's also very interesting to me anytime that we bring someone in that has this type of background, pedigree, and interest in finance that then turns that focus towards private investing, which I think is also interesting to you because you bring that up a lot when we talk to people like that.
Yeah, it reminds me of talking with Alex Rubalcava, that was Bill Gurley's background. And for fans of the show, I'm a fan of Bill Gurley, who actually just announced he's going to retire. Little side note. But so much of traditional finance and what you study for in the CFA and the public markets and FinTwit is centered around this traditional financial infrastructure, the way things have been done since the 1500s in London when the modern stock exchange was invented, the way they've evolved. And it's just really interesting when people take the advances there because all the brightest minds in the world are building the future of finance in ways that we don't see. And I think the private markets tend to be a little bit more variable with the sophistication of how you invest. So when you see people who come from a public market background to a private market background, I think they just they generally bring a level of thought that people who maybe start as an angel investor and focus first on relationships don't bring. And I don't know if that's a good thing or bad thing for returns. It's just different and interesting to me.
OmniValley being started in Madison, Grady being located in Madison, I wonder how it would have been different if somebody from, say, like a Tulsa started something like OmniValley. Madison feels like a good place to start something like OmniValley compared to a lot of other cities across the country, just because it's geographically kind of focused centrally in the country. They are, as far as tier 2, tier 3 cities, one of the cities that a lot of people talk to us about being interested in as an emerging city. So it all makes sense.
Let's play a quick round robin here because I'm interested in that idea. I don't know that I've thought about it too much. And before we get into our round robin, one thought that's at the top of my head is in terms of venture and in terms of startup investing, Madison doesn't feel like a threatening city.
What do you mean by threatening?
Like to other ecosystems, it doesn't feel like Madison's going to encroach on their territory. Maybe that's just a weird feeling I have, but I think when you think about like Chicago kind of spills over. So if Grady started this in Chicago, it would feel like a little bit of manifest destiny almost, with Chicago expanding to Milwaukee or expanding to Columbus or expanding to Cleveland, whereas Madison doesn't have that same vibe. So let's play a little game around robin here, Jay. I'm going to name some cities and you say, yeah, OmniValley fits there, or I don't know. You ready? This is a segment of the show called Eric Makes Up a Game. Austin.
No.
Salt Lake.
Yes.
Bozeman.
Yes.
Tallahassee.
No.
New York.
No. I mean, yes, but also people would look at it and be like, but you're New York.
All right, one last one. Denver.
Sure.
Oh, hold up. One last one. Boulder.
Also, yes. What's interesting to me about Madison is, Grady getting into this for the first time and talking to investors in the Madison area. It's also just a short jaunt over to Milwaukee, which I think is key in starting something that is so interconnected to different ecosystems, is having another one really close by. It feels like an easier bridge. And now it's not, that's the Wisconsin, or that's not the Madison guy, that's the Wisconsin guy. Then you shoot over to Minneapolis maybe, and now it's like, oh, that's kind of middle of the country guy. Anyway, I think geographic placement was important in starting OmniValley there. I think it's a super interesting and valuable tool for making these connections between investors. I think Grady's probably a little bit underestimating the financial viability of something like this, but I respect the ethos of making it free and available for these people.
Yeah, I agree. I think that this is a like upside where we're connecting communities outside of Silicon Valley. OmniValley is connecting investors across the country. I just think there's such power in doing that. When we first started Upside, Jay, we talked a lot about this term. And when I say we, I mean, I talked about it. You said stop using that term, archipelago. And it's kind of how I feel about the communities outside of Silicon Valley, where they're all doing things, but they're all kind of focused on themselves. And from an investor standpoint, geography doesn't matter as much. So you can be in Cincinnati and invest in Cleveland or Columbus or Chicago. They're all kind of these one-day trips, or you can have new co-investors. You can get outside of your city. But right now, I think that people are kind of, just because of human nature, focused on their own thing and haven't expanded. Maybe because it hasn't been easy to expand.
I just looked at the pronunciation of archipelago. I always thought it was archipelago. And you are correct, which is half the reason why I told you to stop using the word. So I apologize.
Should I bring it back?
If you want to. All right, guys, we'd love to hear your thoughts on OmniValley in this conversation with Grady Buchanan. We'd love for you to check out OmniValley if you are an institutional investor, angel investor, venture capital firm, accelerator, or ecosystem supporter. You can just go to omnivalley.co. And if you have any other thoughts you want to share with us, you can email us hello@upside.fm. Otherwise, we'll talk to you next week.
That's all for this week. Thanks for listening. We'd love to hear your thoughts on today's guest, so shoot us an email at hello@upside.fm or find us on Twitter @UpsideFM. We'll be back here next week at the same time talking to another founder in our quest to find upside outside of Silicon Valley. If you or someone you know would make a good guest for our show, please email us or find us on Twitter and let us know. And if you love our show, please leave us a review on iTunes. That goes a long way in helping us spread the word and continue to help bring high-quality guests to the show. Eric and I decided there were a couple things we wanted to share with you at the end of the podcast, and so here we go. Eric Hornung and Jay Klaus are the founding parties of the Upside podcast. At the time of this recording, we do not own equity or other financial interest in the companies which appear on this show. All opinions expressed by podcast participants are solely their own opinion and do not reflect the opinions of Duff & Phelps LLC and its affiliates, Unreal Collective LLC and its affiliates, or any entity which employ us. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. We have not considered your specific financial situation nor provided any investment advice on this show. Thanks for listening, and we'll talk to you next week.
Never mind, bro, that can't be matched. I'm lighting it on fire, used to run victory laps, and still I'm not even tired. It's all about the timing, yeah, that's what they say. Well, I'ma keep